I'm not one who's trying to completely find time and like it's sort of weird. Is those that are trying to find time and who are trying to get passive income. It's so that they can do what they love or go where they love.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I am so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Please make sure to hit that subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have Wayne Courreges III. Wayne is the managing principal of CREI Partners, a real estate investment firm founded in 2019 with a focus on acquiring apartment communities and developing build-to-rent communities in areas with strong market fundamentals. CREI Partners currently has $33 million in assets under management in Texas and Louisiana, and Wayne's objective is to protect investor capital, provide high-yield returns, and give back to communities by providing residents a safe and comfortable home environment. Wayne, welcome to the show. Before we dive into it, give us a quick 2-minute rundown of who you are, your background, and where you are in your journey to achieving time freedom.
All right. Well, thank you for having me on the show, Chris. I'm super excited. We are in a mutual mastermind together, so it's always good to connect. So, who am I? I'll start with my family first. I'm married to a wonderful woman who's been a big support, and which is really important in real estate investing. There's ups and downs, and it's not always easy, right? So. But we've been married since 2009, and we have 3 kids. Hunter, who just turned 11, Lily, who's about to turn 10, and then I've got an Emma who turned 8. So it's one of my big whys, right? Is the family. But I've been deep in real estate investing. I don't know, since I really think 2003 when I got in the Marine Corps. I was stationed in 29 Palms, California, and was able to buy a 2-bed, 1-bath in 29 Palms, California. And that thing was like, I don't know, $80,000 and, nothing huge, but it was a start. And so I've always been very passionate about real estate investing. Got the bug in high school through a mutual friend's dad who I looked up to. And then I had the really great opportunity to join a Fortune 150 commercial real estate company, heavy on the property management side, where I've done the last 16 years. So commercial real estate has been, it's been my job. It's been what I've done really since getting out of high school, right? So excited just to continue the journey. I don't really view this as a job when I am going to properties and such. It's just, people go golfing, people, play sports, etc. I'm very fortunate to have real estate investing. I'm not one who's trying to completely find time and like, it's sort of weird. Is those that are trying to find time and who are trying to get passive income. It's so that they can do what they love or go where they love. And I'm not trying to, be corny here, but I really do love what I do. So, Jennifer, my wife was like, all this work you're doing, we're getting set up to retire in our 40s. It's like, no, that's not my goal. My goal is to continue doing what I love. And anyway, it was just sort of funny how, we had to have that conversation of like, I'm going to be working probably till I die, but that's okay. It's not work. It's like what I do. It's just my passion, just like, going to the mountains or going biking or golfing, for many other people. So
I love that. Yeah, that's a really, really good point, because a lot of people, they end up trying to find an alternative ways to spend their time because they're not happy with the current position that they're in, whether that be the W-2 or whatever it is that they're doing with their day to day. And it's refreshing to kind of hear that someone is actually in it already doing it. And even if they have the opportunity to leave, like this is truly what you love to do. I love
Yeah,
that.
for sure.
Really want to take it way back here because one thing that was really interesting to me was that you got the bug for real estate investing back in high school when you got influenced by one of your friends' dads who you looked up to. Um, so talk to us a little bit about that. Like what were they doing at the time that really sparked your interest back in high school?
Well, I mean, we grew up middle class. I didn't have a very uncomfortable growing up. I don't have a story to say, I started from nothing and here, but in life, and no matter where you are on the financial scale, there's always somebody in a family or something that has more, right? And um, so I dated this girl in high school who had more than what we did, and her family were super wonderful. But her dad uh, did real estate investing, and I just remember him paying everything in cash. I remember one time I was at a computer. I don't know. I must have been in the Marine Corps because we did it through the Marine Corps, and I was looking at my credit score or something. It's like, oh, let's look up my score, and like there was nothing, even though I knew like he owned all these assets. I also remember like though they did very well for themselves, their paper losses were quite large because of depreciation, and we won't go into all the schools, but very high end school, law school, etc. I'm sure, I don't know their financial. We broke up, but they were given a lot of, you know, sponsorships or scholarships, I should say, just because on paper, they it was just different. The country club lifestyle. There were just things that I did, but honestly, more than that, I really looked up to, you know, their ability not having to go day to day to their job. They were um, going to going on trips and doing things as a family. So anyway, it sparked my interest, and then I just really enjoyed it. So um,
Love it. Love it. And at this point in time, you fast forward, you graduated high school, you entered the Marine Corps, and during that time in your Marine Corps is when you've purchased your first rental unit, right? So, what did that kind of look like? Can you kind of break us down as far as how you qualified for that, why you chose, the area that you chose to invest in? What was that kind of first experience look like for you?
yeah, so I was went to boot camp 2 days after high school. So that was like one of my. I think there's forks in everybody's life story, right? Especially early on when you're dating someone in high school and you feel like they may be the one forever. But there were certain decisions that I'm proud of that I made. I feel like the right decisions. So 2 days out of high school, I went right in the Marine Corps. During that time, Operation Iraqi Freedom was going on. There was a lot of risks for people getting in, but I felt like I needed to serve and I wanted to serve. My family has a long history of service to this country for generations. So that was like not even a hard decision. It was just like I signed up in September of my senior year. I mean, that's how like focused and ready to go I was. So 3 months boot camp, and then you have infantry school, and then you have your MOS, which is your military occupation specialty. So you got your schooling, and then I was stationed in 29 Palms with 1st Tank Battalion. And probably the first 6 months or so, I was looking for properties and really, starting with real estate agent. I went into town, which those in 29 Palms or been to 29 Palms at the time. And I don't know, I haven't been there for, 15 plus years, but, it was a small town, and I'm sure still is military town. But there was a realtor there who I went in and was looking to buy my first investment. It happened to be her first. It actually happened to be one of her properties that she owned, and we went through a lender. Mind you, this is right before the financial crisis, so they probably shouldn't have been
Right.
giving a Marine, who maybe making 19,000 a year. And I may be overstating that salary even, but um, but yeah, I just got a conventional loan, and it wasn't a lot. I don't think I've even put any money down, but I did find renters, and I had really good renters, good friends of mine. And I remember being then stationed in Okinawa, Japan. And, this is closer to 2006. And I remember like, okay, well, it's probably a good time to sell because, I was leaving the Marine Corps and I didn't want to, I didn't know what job or what was going to, support me or support that property, if those renters left. So I called my friends who were renting. And I said, I'm thinking about selling. Are you all interested in buying? They're about to have a kid, and that spoofed them. And they went to back on base. So my property sat for like 6 months, and eventually it got destroyed by some people. And I'm in Japan, and I just remember
Oh
the
my
realtor
gosh.
calling me and saying that this property, I had it on the market, right? So it sat there, didn't sell for like 6 months. And, I'm probably 20, 21 at the time, freaking out, don't have control. But I called USAA. I'll give them a shout out. I normally don't do shout outs to companies, but USAA, I called them, and I had my insurance through them. And, I'm just telling them the story and just really stressed out. And they're trying to coach me through it. They're like, do you have a refrigerator, or no, do you have any personal property? And I said, no. And so they started asking me questions. And one of the questions was, do you have a refrigerator in there? And I said, yes. They're like, okay, well, we can cover you. And that's what they did. They covered, the full renovation of that property, because I had a refrigerator in there, and obviously I had insurance.
Wow.
But it was just something very grateful. So I'm very loyal to USAA. A lot of our stuff is there. But yeah, that was our start. And then, through life, through having kids and, wanting to live in our properties, we took advantage of the VA home loan, for sure. There's not one property that we've lived in that we've put any money down. It's all been, 100% VA home loan. And so, it's been a huge blessing and a benefit to having served and still continue to have that benefit.
Absolutely. And so I take it eventually you got to the point where you're able to sell the property, or do you still have that in your portfolio today?
Yeah, I sold it. I sold it right before the housing crash, and I don't think I made
Wow.
much money. I made like a couple grand. But I remember when the housing crash. I don't know if you remember, California prices just like plummeted, and yeah, I think it was worth like 40,000. I mean, this was not a nice. I mean, it was just. I mean, it's a desert home, 2 bed, 1 bath. But it was my start to real estate investing, and I'm glad I obviously sold that property. But it was just, again, as I mentioned earlier in the podcast, when people go out golfing and they buy a set of clubs, or, every few years, like from, that I'm always looking at real estate, like, you know, even going to a hotel and I'm like, the lights are, not the same color, it just, it bothers me when things, but that's just who I am. And so, um, but yeah, that was my first story. I mean, it didn't double my money or anything, and I think that's something important too. Is real estate investing is a long term game. It really is. It always bothers me when these gurus and people are like, "Oh, get rich in 5 years, quit your W-2 job and stuff." I mean, it's not easy, and it's a long term strategy.
Absolutely.
Because the markets can change. I mean, even like when we sold a property in Austin a couple years ago, like during COVID. It was our primary home, and I gave the agent a week. We went to Arkansas. We love to camp, and we went to Arkansas for spring break. And my friend who leased or marketed the property was like, "You got 1 week. If you give us this offer, or someone provides this offer, then we're open to selling." And so, yeah, they gave a crazy offer. Talk about doubling our money. Like that Austin real estate deal was incredible investment. And it was a cash offer. We closed in like 12 days, but then they let us lease back for 3 months so my kids can finish school. And then we were like, okay, where do we live next? Where do we go buy? So we bought some land, and now we have some cows and chickens. But even this place we
Wow.
have it's more of it's a real estate play, right? They're not making more dirt. So whether you're on a 0.2 acre property, and you're living within your means, and you're living within your home, like, I know Rich Dad Poor Dad, says that homes are not assets, it's a liability and such. And, that may be the case, but I'll tell you, every home we've made has helped us grow our wealth over time. So I consider it more of an asset.
No, that's a really great point, and it's also refreshing to hear that. There's so much stress on like what is the ideal market or what is the ideal time, what is the ideal asset class to invest in, and as you had outlined earlier, when you take a step back and realize that real estate is really a long term play, um, for the most part, I'm not going to say all of it, but I'm going to say for the most part, if you purchase a tangible asset such as a real estate property over time, it will likely be worth more than it was when you purchased it. And so, yes, there are markets that are set up to experience tremendous growth, and of course, those are ideal if you really want to maximize your investment in a shorter period of time. But if you do take a long-term approach to this type of investing, um, you can really just buy anything. There's only a finite amount of dirt, as you had mentioned, and so if you just buy something, those values are going to go up. I love how you mentioned that.
Yeah, and you mentioned when we were connecting before, like the podcast, that this isn't strictly on real estate. Like I think you can make money in anything that you are truly passionate about, right? Real estate just happens to be what I'm truly passionate about. My son is truly passionate about football cards. I mean, he's obsessed with football cards, and he buys football cards. And you know what? He goes online and determines what that football card is worth, puts them in a plastic sleeve, and then we go to a conference and sells them. The guy loves football cards. So at the end of the day, like it doesn't. We all started. My kids. We lived in the neighborhood in Austin. Like they had a lemonade stand. They made money. They made. There was profit out of it. And none of this stuff, whether it's real estate or business, I never say it's rocket science. Like it's hard work, it's grit, it's strategy, it's relationships. But the premise is the same. You don't need an MBA to learn this, even though I went to school for it. But revenue minus expenses is NOI. Find ways to maximize revenue, find ways to reduce expenses while providing a good service, and your profit is your NOI. It's net operating income. So it doesn't always have to be in real estate. I just think it just needs to be something you're passionate about, or maybe you want to diversify into real estate. Well, find somebody who's very passionate and who's going to give it their all, whether it's highs, lows, because that's just, it's their passion to do it. Cause it's not always going to be easy.
Absolutely. And you made a good point there too, in that over time, like you said, with your son, he invests in cards, you invest in real estate, other people can invest in the stock market. For someone who is getting their personal finances set up and is now in the position where they can consider investing, I think the point to drive home here is really to invest early, right? I mean, what would you say to someone who's looking to invest and why they should invest early relative to trying to time the market or trying to spend all this time trying to find a perfect asset class?
Yeah. So I'll start with not everybody had a fortunate experience of learning financial management. Honestly, my parents never taught me about financial management, and there were days where I'm like, Dad, are we rich or are we poor? Because he buys the nicest things. But his mindset was like, I'm gonna buy quality first, and then I'm gonna hold on to those, whether it's a TV. I mean, we had Sony TVs that lasted like 20 years, they just, but that was the mindset. But if you are fortunate to start, I think it for me, it's more about mindset, right? When you're earlier in life, and this can be any stage, but more particular early in life, then you're less likely to put yourself in a lot of debt, right? And my thing is like, am I against debt? And no, like I'm like $35 million in debt. Like at the end of the day, it's backed by real estate, in all of it. But debt doesn't stress me out if it's used to grow your grow your wealth, right? And again, it's long-term growth. Um, but it's just the mindset. It's getting educated. It's being humble early to set out ways. It also allows you to fail too. There's going to be things that people. A lot of the younger generation, and I lost a little money in the crypto, but people that have more risk can do more risky things when they're early in their investing career. As we all grow older, our investment portfolio shifts, and we don't take as much risk. But with anything, the higher the risk, the higher reward. It's similar to real estate, where opportunistic opportunities where you start with land and you develop, that's a higher risk than buying a stabilized cash flowing asset. And that's a lot less risk, but, and a lot less returns, but it's definitely a little more stable, right? Stocks, you can invest in growth stocks and new startup IPOs, etc. More risk, more return later. So if you start early, you have the ability to ride the waves of the market, the economy, but you also have the ability to take more risks that you wouldn't may do, as you're, approaching, um, retirement, and retirement's a lot
Right.
different than it was, when my parents retired, like people were working 60s and 70s, and that's okay because they're living a lot longer too. And I know a lot of people who retired and then they get bored and then they go back into the workforce, or, they retire and then they don't have a purpose. And then they, their brain just shrivels away. So again, I know the podcast is about time management and such like that, but ultimately, you know, all of this that we're trying to do is to do something that you enjoy. It's not just to sit on your couch and watch Judge Judy, even though I love, watching the rerun of Judge Judy. But ultimately, that gets old after a while, right? It's finding your passion and being able to do what you enjoy most.
Absolutely. Yep. And really focusing on that as the main driving force behind what it is that you do. Because as you had mentioned, it's there are ups and then there are downs. I mean, this is coming from someone who worked in the commercial real estate space going through 2008. You definitely can testify to that. But as long as you have a solid understanding of why it is that you're doing it and you have a purpose behind it, that's really going to be the driving force behind making it through those tough times.
100%. Yeah. And I would say, from a CREI Partners standpoint, I never thought I would, when I started it, it was to, bring in capital to buy properties that we wouldn't have been able to buy on our own, and everybody benefits, right? And and then as I started educating and learning more, I started getting more passionate about passive investors. And it's almost like when you're in school and people get picked on and you sort of like, no, you're not going to do, you sort of stand up for these people. But what I started seeing over the years, last couple of years, is that investments are being offered that are risky, and they're being offered to people who don't know what to ask or what to do, when they're looking at a offering. And so I started a monthly meetup the fourth Monday of every month. It's grown actually over 1,200 members, and surprisingly, it's like the largest passive investing club or meetup. Now, only 40
Wow.
or so people join it, every month. But it was a way for me to give back and educate. We're starting up doing a passive investor course in a couple months that we're going to be launching. And then I do these podcasts. And what it has turned into the focus on real estate investing, it's also turned into education. Talk about your why. And so it's become like, when I think about everybody as my mom, and I'm like, would my mom know enough to invest wisely or ask the right questions, or would this investment be good enough for my mom that I would want her to invest in? And so when you shift the lens from yourself and to someone who completely knows nothing, but also can be very vulnerable because they have money but they don't have the education, and that's a really scary thing. There are doctors, lawyers, etc., who are extremely great at what they do day to day, really good, but not so much they don't know much about real estate investing and underwriting, etc., and what to ask. So, my passion has shifted a little bit to continue real estate investing, right? That's my love, but also making sure that whether you invest with me or not, that you're educated enough to, make a business decision for yourself. Real estate is business. It's just like any other business. Again, what we talked about earlier, revenues minus expenses, NOI. Does it make sense? Um, and so I go more into that in the meetups and in the course that I'll be rolling out in a couple months. But education is become a passion of mine too, to help people.
I love that. And on that note, right, given the state of the economy right now, the Fed has mentioned that they're going to continue increasing interest rates over the course of this year, and just given the such low supply that we still have in the market relative to the demand that's out there, um, what are some of the different things that you are doing to kind of mitigate your risks with this current market? And I mean, what are kind of like your insights on the current state of the economy as it is today?
Yeah. So I'm gonna focus a little bit on single family and then shift to multifamily. And when I say multifamily, I think I'm gonna really, every asset class in commercial real estate is gonna be different. So I'm gonna focus on those two. For one, single family, it's impacting a lot of people because values are going down because people can only afford what they can afford, right? They're only, was it debt to income? It is what it is. As interest rates go up, the mortgage payments go up and you're able to afford less. And so if a seller wants to sell it, to get out of it, they've got to lower their price so that more people, a bigger group of fish can come in and hopefully one will offer to make a purchase. Um, and then what that does is it creates comps. So a couple houses down, this house sold for 100,000 less. So that means my house is probably 100,000 less. And, that's the trend on that. That's single family. That's the risk. And that's where, rich dad, poor dad, like I get it. Like there's a liability on that. On the commercial side, values are based on income and cap rate. And cap rate a lot is dependent on demand. I don't think it's, completely have a direct relationship with interest rates, though that does impact for sure. But if you're buying in an area that has strong demand, when I say strong demand, the area is growing because of jobs. We focus in areas that are landlord friendly states, so Texas, Alabama, Louisiana, the Southeast primarily. These are more landlord friendly states, and they also are a big contributor of the jobs in the U.S. And so we're looking at properties that we can do a forced appreciation on a value add, right? You mentioned earlier that properties typically go up because of just, they're not making more dirt. It naturally appreciates. There's not much you need to do. Also, we've got inflation in place. But forced appreciation is just going in and finding a property that may not have been managed as well as you could potentially do. Or there's deferred maintenance. There's reasons why the property isn't able to have its best in use in that market from a rent standpoint. And so we'll go in and find those properties, underwrite, and make offers. Going back to your question in this market, there's a lot of people sitting on the sidelines. I went to a conference a couple of weeks ago in Houston. I mean, one of the speakers was like, "Don't buy now, like buckle down, operations on." I mean, you should already be doing that anyway on your properties, like buckling down, focusing on, ways to make your business, your apartment or whatever it is more efficient. But given the information we know that interest rates are going up. So how do we reduce that risk? We buy a rate cap. One of the properties we bought 6 months ago, we spent $350,000 for a rate cap. But that $350,000 gave me a 2.75% rate cap. And right now the SOFR is over about 4%. And so every night I sleep okay because every month I get a credit from the group that we bought the rate cap from. And so I'm not really worrying about interest rates because they're going to have a rate cap. And I also have a rate cap for, 3 years, so now I will say I was fortunate because I was gathering information when we were buying the property. People that bought the property 2021, 2022, they may not have had a rate cap, or they may have only had a 1 or 2 year rate cap. So what does that mean? Those people are probably struggling, and I'm willing to take the struggle off your hands because I'm willing to buy. Like I'm one of those people that I don't really time the markets. I just take the information of what's going on in the market and I make it a win-win for the buyer and the seller. So you're struggling and you're negative cash flow, like let me buy it. And I'll give you an offer based on what my numbers work. And my numbers work have to be at least an 8 or 9% interest rate because that's what it is today. And I have a rate cap, so I'm not stressing about that. Cap rates are going to be a little higher. Expenses are going to be a little higher. I'm not doing the 1 or 2% year over year expense growth. Like there is inflation. Taxes are what they are. In Texas, if you're not underwriting 95, 100% of purchase price, you're going to be struggling year 2, year 3 when the city or the county finds out, hey, you bought it for this. Now your taxes is this standpoint. Insurance, coastal insurance rates are going up. So you've got to have a good relationship with an insurance broker who's going to give you the truth of like, hey, this is where rates are going to be per door. So, Chris, at the end of the day, markets are going to come up, down, and adjust. It's taking the information, putting it into an underwriting, being conservative, and then giving your price. If your price works, great. If it doesn't, that's okay. There's going to be another deal down the road, and I can go more on how we find deals, et cetera, in these type of markets. But you just got to know what's going on around you and plug in the numbers and see if it works.
I actually think that would be a great transition because you're making some good points here in terms of how you are managing the current economic environment and what you're using based off of the data that you're currently given, right? Because that's a really good point. Is we don't have a crystal ball in the future, right? And of course, we can try and learn from historical data, but the problem is there's no guarantee that that historical data is going to repeat itself either, right? So I like the approach that you're taking in terms of taking the existing data that you have and making a decision based off of that. Now, moving on to the acquisition component of these deals that you're having. So, what does it look like for you in terms of the system that you have in your business? Where how many deals are you making it a goal to review on a regular basis? How many of those are you putting offers on that make sense? What does that kind of look like for you, and how do you find these deals?
Yeah. So, you talk to people and they're like, oh, I've underwritten 100, 200 deals for that one. They make it sound like there's tons of deals out there and that everyone's having all these underwriting, but that's baloney. Like there are not that many deals out there in today's market. Whenever I go to a conference, I always have one goal out of that conference, right? I don't come in shotgun approach and like, hey, I want to meet some investors. I want to do this. It's always one goal. And that's what I'm focused on. 2 weeks ago, when I went to a conference, my goal was to find people who were selling properties. I went to brokers that were there, and then I went to just people in the lounge while the presenters were talking. I was out, trying to network. My goal is to buy. We've got capital. We've got investors. We just want to buy properties. And it was amazing. A lot of people, either they want to sell, but they can't because their cash flow is so low because of debt service, or, they're struggling in the fact that, their pro forma isn't going the way they thought it was. And so they don't want to sell yet because their investors may not get the returns that they were projecting. So they're just going to hold, which I get. There's other sellers who they don't need to sell because, like us, they got into more of a longer term debt with the rate cap, and they're not in a position to have to sell. So why sell in a market that's not going to give you the most? And so, there were definitely those. And then you just have a lot of people who are just going to wait and see, like they're on the fence. So with that said, I went to that conference and I left. I'm like, there's not a lot of movement. There's just not a lot. So what does that mean for us as people who we've got a lot of passive investors. There's probably people on this call that they have money, but they're wanting to invest. Every week I have lunch with a broker. I'll give an example. Monday I had lunch with a broker. We're building the relationship with them. They said that they're about to take a property to market in 2 weeks. I said, may I please have early access? That day I went to the property. That day I did an offer. 3 days later, I walked the property with the broker. The broker was like, can you do a little bit better? And I was like, well, now that I've seen that the property is really in great condition, like it really is in good condition. They've not had a lot of deferred maintenance, so I was able to reduce some capital, talk to the management company to see what they think they can do. What are some opportunities? And so I redid the underwriting, did another offer. They countered. Now, mind you, like it's the art of negotiation. Like you're not putting your best offer day one. So there's always this back and forth. So I'm still in my strike zone. He comes back. This was Friday. Today's Sunday. So this was Friday. I asked the broker, I was like, hey, just give us a counter. So they countered and still in our strike zone. But there was a couple other things I didn't really like they wanted hard money day one and stuff. I'm okay with hard money. I just didn't want to put the amount that he wanted. So made some adjustments. And hopefully, like tomorrow, being Monday, we'll have a call with the seller. He wants to do a video call, and we'll have an active deal. It took a lunch, and it took, don't wait a day, don't wait an hour, like go be hungry, go find that property, meaning if a broker's telling you about something, they're also probably telling 3 or 4 others. So it's who's going to that deal the fastest,
right?
And
right.
putting an offer. Time kills deals in every aspect of a real estate transaction. Time kills deals. I've had a deal where, I was so excited. It worked. The numbers worked. It was fantastic. The attorney killed my deal. He took so long to get a PSA back and forth. And I won't say a name, but he's one of the celebrity attorneys out there that we all probably see and hear on Facebook and these masterminds, etc. But I'm still worked up about it, and that was 2 years ago. Because I was like, man, that was a great deal, and you screwed me because you took too long to get my comments back, and then they decided to go a different direction. So that's one way. Another way is, Chris, is we've always, since I started, and we've bought properties because of this, is go direct to seller, and we do this. And I'll tell the secret sauce here. It's not. It just takes a lot of work. You go to the county appraisal district. Actually, if you can get a list, so through CoStar, get a list of things you're looking for. We personally look for 100 plus units, 1970s and newer. Like we have a strike zone, right? So you find those properties in whatever given market you're in. You go to the county appraisal district. You find who's the recorded owner. Then you go to the Secretary of State website. You find who the true owner is. And then you use a service like Ben Verified, and there's others out there where you try to find who the person is. Now, a lot of the data is trash or old, but it just takes one buyer or one seller who's interested. And so I've got a great team member who does this each day. Like that's his focus, is finding these off-market opportunities. And it's a slow game because a lot of, like, as I said, there's not a lot of people selling, but if you build those relationships, it eventually will work out. I'll give one quick story. 2009, did a similar thing, did a text blast, building relationships. This doctor in Los Angeles got my text message and messaged me back. He owned a property in the Galleria submarket of Houston. We built the relationship literally for 2 years. He would come in, I'd see how he's doing. He had a heart issue, and I didn't really care about the real estate. I just was like cared about him, checking in on him. And then last year he messaged me, or I messaged him like, hey, now that you're doing better, are you ready to get out of your real estate deal? And he's like, I'm actually there in Houston this weekend, let's do an LOI together. So made an offer, LOI, and we bought that property. So broker relationships matter, and doing hard work, finding true owners matters. Now, what I did tell this broker, Chris, this week, once it goes to the market, I'm done. I'm not buying it on market. 2 years ago, the big reason is because I would waste time, and then there would be someone who would put in $1 million more, or they would just you just had a hard time getting it. So if you can get early access and have those broker relationships, now if you're working a full-time job and not having the ability to do this, like that's really hard because it takes a lot of time. Again, my life is real estate. So, weekends, night, like if it's a passion, it doesn't feel like a job, but it's a lot of work to find that one property. I know I'm talking a lot here, Chris. You asked me how many do I underwrite to find the one?
Yeah.
Sometimes it's just 5 to find the one, because ultimately I just underwrite to what my numbers work, and I make an offer. And I make an offer not at the max price that my numbers work, but at a price that's not insulting. You know, you don't want to insult these people, but you know, you put a decent price out and go from there. And I mean, I'm sorry, I can just keep going on and on. Before you even do an offer, though, you got to verify your insurance rates with your insurance broker. You got to talk to your
Right.
lender. There's just so much that goes behind that first offer, that you can confidently say, okay, I've got a good offer, and now we can go back and forth to find a win-win.
I love that. I love that. Yeah, and that's the thing, right? It is a numbers game, and it also is surrounding yourself with a really strong team that can give you this type of information quickly, so you can make a decision on something very quickly as well. So it sounds like,
Very,
if anything, you're having lots of conversations and constant conversations with the other members of your team, your attorney, your
mhm,
insurance agent, you know, multiple brokers that you're working with, lenders, just so that way you can get yourself to a point where you can make an offer.
100%. Yep. And then if in maximize like your lender team, like, I mean, you do want to build that loyalty and that trust with certain team members, right? But you know, if the brokerage firm has a lending a debt side, you know, sometimes using their debt side helps you be more attractive because their firm gets more money, right? So it's being strategic. Like, hey, company X, thank you for this opportunity for this deal. Here's my offer, and by the way, I'm wanting to use your debt side as well if you can help us get us across the finish line. And I think that's important.
Oh,
One, because that broker has confidence the deal can get done. Because if it doesn't get done, they don't get a commission, and they, you know, have an egg on their face
right.
in front of the seller. Two, it gets their firm additional money. I didn't have to really pay additional money. I was going to pay it anyway, the broker, the debt fee, etc. Um, so that money was already going to be spent, and it's just going to go to their firm. So it's, in my mind, it's a win-win. So it's strategy, is looking at the holistic picture, and it's rewarding these brokers for bringing deals to us, and them having like that lunch I had on Monday. Guess who he brought? I didn't ask him to bring the debt guy, but he brought a debt guy. You know, and so I'm like, okay, well, now we had lunch, so I know, and we've had, you know, a few calls since. That helped us get to a point where we're on a Sunday. That was a Monday. Sunday, here we are today, very close on that deal. Tomorrow, we're going to have a video conference call. Hopefully, we've signed up, and then we're full steam ahead on, you know, a very, very good property.
I love that. Love that. Thank you for those insights, because, you know, as we know, it's very difficult. Everybody says there's no deals in this market. There's no deals in the market. And clearly, what it is that you're doing is, one, being readily available for any and all opportunities that do come across your plate.
Yeah.
But two, really developing those strategic relationships with other professionals that are in this industry that can get this deal across the finish line. Love that. All right, folks. So we are coming towards the end of today's show. But before we finish, it is time for the Freedom Five. These are 5 questions that we ask every guest on our show, starting with the most important question: what is your why? What is the underlying motivation behind everything it is that you do?
Yeah. My whys have changed a little bit. Ultimately, the straight answer is family. But when you have a call with an investor, and that investor says, I'm going to invest X, and this money is going towards my kids' college or my grandkids' college, I'm like, damn. Like, I go to my wife afterwards. I'm like, this is why I'm doing it. I don't run away from that responsibility of taking care of and having the fiduciary responsibility of finding ways to make other people's money work. I'm very passionate about that. So I treat other investors' money as if it were my capital, and and that's a big part of my why as time goes too, because it's not about, you know, in December I was thinking about what we accomplished in 2022, and naturally I was like, oh, I accomplished this, this, and this, and I was in the shower, and I'm like, I was thinking in the shower, and I'm like, you know, it's not about what I did. What did the investors get? And they got cash flow, they got depreciation, they've got, you know, tangible, you know, ability. I had a 1031 investor invest that saved them quite a bit of money on taxes, um, and I put that in a blog. But it just, you know, that's been a huge reason, big why, is it's helping, you know, people find their financial why. It may not be for them to leave their W-2 either, but you know, just just to invest in real estate to find another diversified asset class.
That's great. Second question we have here: what book has had the largest influence on your life?
Yeah, I would say, and this was many years ago, but The Speed of Trust has always stuck with me. An organization and a business is only good based off the trust that the team. Uh, it truly is. If you don't have trust in your team member, things get broken down, and the speed of which things have to happen. I mean, going back to this deal this week, like I had to have trust in several people, several groups to give me their thoughts so I can underwrite accordingly. So top of mind, Speed of Trust. I think it's Stephen Covey. It's been a while, but that book is always, no matter where you are in life, family, business, whatever you're doing, you've got to have trust.
Absolutely. Got to check that one out. Third question we have: what is the most impactful thing, whether it's a piece of technology, a habit, or a person, that has helped in freeing up your time?
There's a saying, to make money, you got to spend money. and I have done that in this business. And a big part of that is building a team of people that are growing the business and growing the dream together. So, we have 2 W-2 employees that are focused on investor relations, brand, and education. We've got a gentleman that has been with us over a year and working in El Salvador, who has just been an incredible asset to us on our podcast, editing podcasts, but also finding those off-market opportunities. And so, he's also helped, just simple, not simple, but, just time-consuming task of, email management, things that just would take so much of my time. And I was doing it all when I first started, and still trying to be a dad and, go to work and be balanced. And once I found people, now these people that are on my team, like I've known a really long time, and I was just very blessed. I was like, hey, can I have 10, 15 hours of your time? And, but when you add those people to your team and everybody's working in the same, paddling together, it frees up my time to focus on the acquisitions, to focus on building relationships and underwriting and et cetera, and executing the deal. They know once I go into a deal, the next 2-3 months, I'm like, it's all about raising capital, closing the deal. I still need them to focus on marketing and investor relations and brand, et cetera. So it's adding team members, to help you scale.
Absolutely. Yeah, it's definitely, you only have 24 hours in a day. So if you can leverage the time of other people to help get stuff done, people say, how can you do all of these things at once? It's because it's not just me doing all these things at once. It's
Right.
it's several people doing these things to move the needle forward there. All right, fourth question we have: what is the number one piece of advice you would give to anyone else looking to achieve more control over their time?
Oh, I think going back to your why and finding your passion, um, you know, people want freedom of. I was talking to someone a while back, and they're like, I'm ready to get on my W-2. At the end of the day, like you can get out of your W-2. You can. You're like a business yourself. Income minus expenses, NOI. So if you really wanted to get this time and do these things, you've got to make sacrifices. Now that could be living in a van down by the river. Like you could do that and be perfectly content. There's plenty of people who are traveling the country with a travel trailer and homeschooling their kids and making an amazing life of themselves. Money is not the happiness, it's the time and the ability to do things that you're most passionate about. So I think at the end of the day, it's just really, if you're not happy in your job or you're not happy in what you're doing, like, and it's hard to say like, oh, just quit your job and go find something else, especially in today's economy, but something to work towards. And, don't give up. I think a vision board has been very helpful for me. And, it started off with putting pictures of things that I wanted to accomplish for the next year. And, some things you don't get to do because of whatever reason, but there are things that you do get to accomplish. And then you can continue working on the ones prior. So between a vision board and then just finding, stop the excuses and just really determine, what you really want. Life's too short. When I started the business in 2019, a big reason why I was going to do it is because I didn't want to look back. And I told my wife this, it's like, I don't want to look back 30, 40 years from now and I'm like, hey, what if I did this? Or what if, at the end of the day, going back to what I said earlier with time, the earlier you start something, the earlier you can fail and rebuild, or, have that opportunity to just keep scaling. Failures are not the worst thing, no matter where you are, right? It's the failure, I think, Chris, and I'm getting goosebumps thinking about it because I'm speaking to myself, is being on my deathbed, wishing I had spent more time with my kids, or wishing, Friday I went to Lafayette. It's about a 5-hour drive. I met some partners yesterday at the property on Saturday, and then I drove back, and they're like, that's a long drive, but I wanted to come back for my son's football game. And I'm not able to go to all his games, but, prioritizing and just making things happen, you'll find the time if you really wanted it.
Absolutely. I love that. Yeah, that's a huge driving force behind myself as well, is what you said just there. It's like, I don't want to be on my deathbed, just wishing I did X or wishing I did Y, or that's the biggest thing. And that's, if there's any sort of sense of urgency to do what it is that you're truly feeling, because the fact of the matter is we don't know when that actually is going to be either. Right. And so what better day than to do it now? That's great. 100%. All right. Fifth and final question we have for you, Wayne. What is the best way for our listeners to get in contact with you?
Yeah. So first, any listeners that are interested in learning about CREI Partners, please go to CREIPartners.com. I do have an ebook there that goes a lot into passive investing. You can sign up for our investor club, reach out. You can also email me at wayne@CREIPartners.com. But my website is a good place to learn about what we're doing, but also has a lot of blogs that we've written ourselves. We've got a podcast as well. And then we have that ebook. And then in a couple months, we will be launching our passive investor course. So more on that through our website as well.
I love it. Well, Wayne, tons of really great information today. I love how you kind of shared your early beginnings all the way back from high school in your jump into the real estate space. I love how you kind of talked about the importance of investing early, whether it be real estate or any other type of investment or asset class. And I like how you shared your strategy behind how you are acquiring deals in today's market and the value in using really good underwriting techniques. I just want to thank you again for being a great guest on our show, and I really look forward to remaining in touch.
Yeah, for sure. Thank you, Chris, for having me.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Rubio. Till next time.